If you are one of the over 20.5 lakh retail shareholders of Vedanta, or if you have been watching this talk from the sidelines, listen closely. This is arguably the most important video you will watch this month. Vedanta, the mining and resources giant, has officially set the wheels in motion for its massive demerger. The company is splitting into independent, specialized entities, and we now have the critical dates you need to mark on your calendar. Specifically, if you want to be eligible for the new shares, you have a specific deadline, April 29, 2026. Wait, why April 29th? And what happens if you miss it? Today, let's break down the Vedanta split. We are going to look at why this is happening, what the 1:1 swap ratio actually means for your portfolio, and how to navigate the upcoming May 1st record date. This is going to be a masterclass in understanding a major corporate reorganization. Hello everyone and welcome to the Fintelligent Investor channel. I'm CA Pratiksha Pai. We endeavor to give you straightforward and educative videos on personal finance to reach our vision of financial literacy being made available to all. So let's begin. If you feel that my talking speed is slow, you can watch on a faster speed. The relevant timestamps are also given. Let's break this down. Let's start with the why. Think of Vedanta today as a giant multi-department store. It has oil, gas, aluminium, power, and steel all under one roof. For a long time, the stock market has struggled to value this all-in-one structure. Investors often find it hard to judge if they are buying an oil stock or a metal stock. By demerging, Vedanta is turning that department store into four specialized, focused boutiques. The goal here is simple: unlock value. By letting each business stand on its own, management can focus, capital can be allocated more efficiently, and investors, that's you, can finally see the true value of each specific business vertical. Here is the part that requires your full attention. The official record date for this demerger is May 1st, 2026. Now, usually the record date is the cutoff, but here is the catch. May 1st is a market holiday. Because the markets will be closed on the record date, you must have the shares in your demat account before the market closes on April 29, 2026. If you buy the shares on or before April 29th, they will settle into your account by the record date. If you buy on April 30th, you will likely miss the eligibility window. So, if you are planning to participate in this, your action needs to be taken by the close of business on April 29th. Please check with your broker to be absolutely sure about your settlement cycle. But for most standard investors, April 29th is your final day. Before going ahead, let me request you, if you feel our videos are knowledgeable, please hit the subscribe button and press the bell icon so that you get timely notifications of all our future videos as well, which we will articulate in a very simple and easy language. What exactly do you get in this demerger? The company has announced a 1:1 demerger ratio. This is straightforward. For every one share of Vedanta Limited you hold on the record date, you will receive one share of each of the four new entities: Vedanta Aluminium Metal Limited, Talwandi Sabo Power Limited, soon to be called Vedanta Power, Malco Energy Limited, soon to be called Vedanta Oil and Gas, and Vedanta Iron and Steel Limited. You are essentially keeping your stake in the parent company, but you are also receiving direct equity in these four new specialized companies. You don't have to pay extra for these shares. They are issued to you as a part of the corporate restructuring. Now, a very common question arises. Does my share price drop? Yes, when the demerger happens, the price of the original Vedanta share will adjust downward. Think of it like taking a pizza and cutting it into four pieces. You haven't lost any pizza, you just have it in separate slices. This isn't a loss of value. It is a mathematical adjustment because the assets, that is, the new companies, have effectively left the parent company's balance sheet. The real question for your portfolio is, Will these four companies perform better on their own? That is the bet that the company's management is making. And it is the bet that you, as a shareholder, are a part of. If you are clear till here, comment the word Vedanta so that I will know that our language in the video has been easy enough for our audience to understand what we are trying to deliver. Before you make any moves, remember this is a major corporate action. There are risks like debt levels of the individual companies and the challenges of managing four separate organizations instead of one. Let's summarize the critical points. We are dealing with a company that has over 20.5 lakh retail shareholders. So you're definitely not alone in this journey. The record date is May 1st, 2026. Your last date to buy is April 29, 2026. You get a 1:1 share distribution in the four new entities. If you are a long term investor, you are likely interested in how these companies grow post demerger. If you are a trader, you might be looking at the volatility around these dates. Whatever your strategy, ensure you have your dates right. This demerger is one of the most significant events in the Indian mining and metal space this year. It is complex, it is huge, and it involves millions of shareholders like you. I hope this breakdown helped you cut through the noise and focus on the dates that actually matter. If you found this useful, please hit that like button as well as share it with your friends and family. It helps us bring more clarity to these complex market events. And of course, keep an eye on your portfolio as we approach April 29th. Stay smart with your investments, and I will see you in the next video. Till then, stay subscribed, stay connected. Thank you.